Hi, Greg Dorsey here. It's Monday, December 13th at Leeb.com, Leeb.com. Well, China's central bank declined to raise short-term interest rates Monday, setting off a wave of buying in equities and, more importantly, in commodities. Instead, the central bank increased its reserve requirements over the weekend. Although the stock buying faded by day's end in the U.S., investors cheered China's less aggressive approach to cooling down its economy. The market's reaction serves to highlight once again the importance of China on the world economic stage. While China's economy is still dominated by export-oriented industries, a slowdown in its domestic growth would be a blow to foreigners hoping to sell their products in China. The country's leaders have announced their targets for next year, and they're expecting growth to slow to the 8% area, and they are targeting inflation to come down from more than 5% today to around 4%, which is still higher than what has generally been tolerated in recent years. Now, the easiest way to achieve these goals without risk of sending its economy into recession is to allow China's undervalued currency to rise at an accelerated rate, which will make imports, most notably for raw materials, cheaper. In commodity trading today, copper broke out to record highs, closing above $4.20 a pound. We can't emphasize enough the importance of the metal in our world. It's used in automobiles, housing, energy production, you name it. And demand continues to rise, and it can't keep pace with supply can't keep pace with it. And China knows this. As for where commodities are headed, or copper specifically is headed, Goldman Sachs raised its 2011 forecast for the metal and is looking for prices to rise by about 20% from current levels. In the report, the company suggested that prices could spike substantially higher late in the year. Well, we don't have an upside target for the metal, but if China meets its targets, the U.S. continues to expand, and the Euro monetary union doesn't fall apart, all things we think will come to pass, Goldman's forecast is likely to prove conservative. Even bigger gains are likely to be seen in another industrial metal, silver, which likewise is suffering from inadequate supply in the face of rising demand. Here in the U.S., there's lots of economic data due to be released this week that can spur prices for both commodities and stocks, including those measuring inflation, retail sales, mortgage applications, housing starts, and at week's end, the Conference Board's index of leading economic indicators. All of this could move the markets, and by the looks of things, we think stocks should have an upward bias. That's all for now. Thanks for stopping by. We'll see you again soon.